Bank of England raise base rate from 5 to 5.25. Link to Bank of England announcement. X200B. At its meeting ending on the 2nd of August 2023, the MPC voted by a majority of 6-3 to increase bank rate by 0.25 percentage points, to 5.25. Two members preferred to increase bank rate by 0.5 percentage points, to 5.5, and one member preferred to maintain bank rate at 5. X200B. If this base rate hike is going to cause you financial difficulty, you might find some helpful information on this mod post relating to the cost of living crisis. X200B. Further information. BBC interest rates: how a rise affects you and your money. MSE: should I overpay my mortgage? Citizens advice: debt money. X200B. PSA: just a reminder about Rule 8: no politics. Let's see how quickly this gets passed on to savers. Feels like it's our new monthly rendezvous. Tune in next month same time to get the anticipated next 0.25 or maybe 0.51. It's interesting, because last month was more of a united front compared to this one. 6-3, realistically it's 8-1 as two of the three wanted to raise rates higher than 0.25. Still more hikes to come this year. Ship Guy, where are you? Market forecast for peak rate is now 5.67 versus 6.5 in July. Given most consumer stuff is priced on the forecast, people won't really notice this increase. Ha, and I thought I had a decent deal when I signed up for a tracker mortgage at 0.25 above base, smiley face. At the time they said it might hit a high of 5 and we're already above that. Most banks have been pricing this in for weeks now. On one hand I'm criticizing the both for this ineffective measure. On the other I'm watching my neighbor, who rents a house that's not got enough rooms for her family, lease a brand new high-end BMW. So, we go higher? RIP me. Looks like shopping at Aldi for the foreseeable future. The switch last month from Sainsbury's and couldn't believe the impact on the wallet. Someone will say which idiot voted to keep the bank rate at 5, and the reality is it's good to have a diverse range of views and to go with the majority. The outcome is almost always what the financial markets predict anyway, regardless of 1-2 votes being outside the norm. What on earth do they think they are going to achieve with this? How will this reduce spending when the expensive things people are splashing out are the bare essentials? Does anyone know of a thread or external forum where people discuss saving interest rates accounts, since they blocked them on here? Tier. Piggybacking on this to ask a question of anyone knowledgeable enough. As I understand it, the raising of interest rates is designed to take money out of the economy by one of two ways: taking money away from people who pay mortgages or other loans and encouraging people with money to save instead of spend. I recently learned, possibly on this sub, that American mortgages are fixed rate throughout the life of the mortgage. So how do they deal with inflation? When rates are low, stocks will grow. When rates are high, stocks will die. I really feel for people in 18 months' time. I got fixed for 7 years at 4 in 2021, which was a rip-off at the time, but my circumstances made it so. Sorta feels like they're trapped in here with me now. I started with a shoddy rate, and at this rate my payments are going up 40 at the end of my term. What is someone supposed to do when they maxed themselves out at 2? Yikes. What do they say about the definition of insanity? Boiling the Frog continues. Someone help me out understanding this. I'm not an economist. As far as I see it, most of the inflation is factors not related to domestic demand, such as food and energy prices increasing due to the war, or everything increasing due to the devaluation of sterling due to Brexit and oil being traded globally in USD. So, interest rate rises are to take heat out of a booming economy and the resultant inflation to try and avoid an economic shock. Whereas, here we are, with the economy weak, attempting to tackle inflation caused by other factors. I know I must be missing something. Can someone explain the forecast assumptions to me in that unemployment is forecast to go way higher than previously forecast but we'll now avoid recession? Seems counterintuitive. Great saving rate, shame I have sweet FA to save. Unpopular but needs to be done. You having less money and being more encouraged to not spend and instead save is precisely the point. If interest rate increases take 12-18 months to actually impact the economy, how does the Bank of England rationalise increasing rates again before the impacts of the previous increases have had an effect? More air. This could easily go to 7. The big high street banks will still be taking the mick with their low easy access rates. For what BOE want to achieve, how immediate is the impact of these rate raises? For example, I have a mortgage due in 2025, so these rates haven't really affected my spending. Will this get passed to savers? When pigs fly. This is becoming increasingly silly now. The fact that rate increases have done absolutely nothing to curb inflation should be seen as evidence that poor people overspending is not the cause of the crisis. Shame neither government nor opposition is ideologically inclined to do anything about it. Joke is on them. I fixed at 5.23 the day before. 6-3 voted in favor. Would seem to suggest this could be the last hike we will see for a while. Haskell remains the only member that actually has a brain. Cool, but I'm getting close to paying tax on the savings, so not cool.